In this video, I'm going to show you how to use 1 hour supply and demand zones paired with a 5 minutes and 15 minutes shift of structure to catch a precise high probability entries. So without further ado, let's jump in straight. Alright, so looking at this very example, this is for the bullish structure, and we are going to be using 2 time frame structures, which is the higher time frame structure and the lower time frame structures. Now on the higher time frame structure, we already seen that we had a break of structure around this very level, and since we already had a break of structure around this level, what we are expecting price to do is to give us a retracement to this very demand level that created that break for us to buy. So now also we see price coming at this very demand zone. What we want to be doing is to be going to the lower time frame to look for a shift of structure. Remember, we had a break of structure. This is the break of structure and this is the retracement. And now as soon as price is creating that retracement on that very lower time frame, we are having this series of lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So basically what I'm expecting price to do is to create a shift of structure after it must have packed on this very demand, this higher time frame demand zone. I want to be expecting price to create a shift of structure on this very lower time frame, then expect a little pullback for us to buy. It's as simple as it is. We already see that price already created a break of structure. When looking at the lower time frame, we already seen that there is this break of structure at this very particular level. And while price is actually moving towards the upside, we are seeing series of higher highs, higher lows, higher highs, higher lows. And after we had that break of structure, we should expect price to come at that very higher time frame demand. Now, when price is actually coming at this very demand zone, we should also be seeing lower highs, lower lows, lower highs, lower lows coming at that very demand zone. Now, what are we expecting? What we are expecting price to do is to come at that very higher time frame demand zone. We should expect a shift of structure at this very lower time frame structure, then a little pullback for us to buy. So if I want to be interested to buy at this point, I want to be waiting for this shift of structure, this lower time frame shift of structure. Immediately I've seen this lower time frame shift of structure, I should be waiting for what? A little pullback for me to buy. You understand? Now, if I want to be interested to buy, I want to be interested to buy at this very level. After I must have seen the shift of structure, I want to be expecting price to push back at that very demand zone that caused that little shift of structure for me to buy. So let's say this was the lower time frame demand zone that caused that little shift of structure. So I want to be expecting price to come at that very point, tap on that very little demand zone for us to buy. It's as simple as it is. So if I want to be interested to buy, I want to be interested to buy at this very lower time frame demand. My SL should be on the very last low that formed that shift, and my TP should be above. It's as simple as it is. So now I'm going to be taking you guys to the chart and I'm going to be showing you guys how to catch these entries. So looking at the chart, this is for the bullish example. Now what do we have? We had price created a break of structure around this very point, and now what created that break of structure was this very demand zone that was formed before the move to the upside. So basically what I'm expecting price to do is to come at that very demand zone for us to buy. So as price came in on that very demand zone, I want to be going to the 5 minute time frame to look for a shift of structure and a clean retest to enter a buy. So now this is on the 5 minutes time frame, and what do we see price doing? We have price creating this level of lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, approaching to that very higher time frame demand zone. So basically what I'm expecting price to do is to create a little shift of structure for us to buy. So what do we have? This was the last low that formed. Now what am I expecting? I'm expecting price to break, to create a shift of structure at this point, breaking this very last low that formed before the shift to the upside. So basically what I'm expecting price to do is, after I must have seen this very shift of structure on the 5 minutes time frame, I want to be expecting price to pull back for me to buy. So this was the demand zone, the 5 minutes demand zone that created that very shift of structure. So I want to be expecting price to come at that very point for me to buy. So if I want to be interested to buy, I want to be interested to buy at this very 5 minutes demand. My SL should be below that low, and my TP should be above, or even around this very point. So let's move over to the next example. This is another buy example for the bullish structure. Now what do we have? We had price created a break of structure, and after we had that break of structure, we had the demand zone that was formed after the big move to the upside. So basically what I'm expecting price to do is to come at that very demand zone that created that very big move for us to buy. As soon as price came at that very demand zone, I want to be going to the 5 minutes time frame to look for a shift of structure and a little retest to buy. So at this point, I want to be going to the 5 minutes time frame. So this is on the 5 minutes time frame. And what do we have? After we had that break of structure to the upside, we had price retracing back to that very higher time frame demand zone for us to buy. I'm basically noticing how the 5 minutes time frame was creating these very little structures coming at that very demand zone. We had price creating series of lower highs, lower lows. So lower highs, lower lows, lower highs and lower lows. This was basically the last low that formed on the 5 minutes time frame. Now, what am I expecting? I'm expecting price to come, take out this very low, create a shift of structure, taking out this very last low, then wait for a retracement for us to buy. So at this point, this was the part where we saw that shift of structure. We saw price created that shift of structure, breaking this very last low that was formed on the 5 minutes time frame. And after we had that break of structure, we had a little demand zone, a 5 minute demand zone that was formed around this very level. So this is where I'm going to be interested to buy. So after I've seen that zone, so I'm going to be interested to map out the 5 minutes demand zone, then expect price to pull back for us to buy. So if I want to be interested to buy, I want to be interested to buy at this very level. Then my SS should be on this very low, and my target should be above. That's basically how to leverage well with the bullish structure. And let's move over to the bearish structure. For the bearish structure, these are the two examples, which is the higher time frame structure and the lower time frame structure. Now, on the higher time frame structure, what do we have? We have price created a break of structure around this very level. And after we had that break of structure, what we are expecting price is to pull back at that very supply zone that formed before that move to the downside for us to sell. So after we have seen price came in on that very supply zone, what we need to be doing is to be going to the lower time frame to look for a shift of structure. Initially, this was the break of structure that we have on the higher time frame, and this is when price was coming in, retracing back towards that very higher time frame supply. So I'm noticing what price was doing. We saw price creating levels of a higher high, higher low, higher high, higher low, higher high, higher low. So coming at that very supply zone. So basically what we're expecting price to do is to create a little shift of structure on the lower time frame, then expect a retracement for us to sell. It's as simple as it is. After I've seen the shift of the lower time frame shift of structure, I want to be expecting price to retrace back at that little supply zone that was formed on that lower time frame for us to sell. Let's say there's this little supply zone, lower time frame supply zone around there. So I want to be expecting price to pull back at that lower time frame supply zone for me to sell. So if I want to be selling, I want to be selling at this point. Then my SL should be on this very high, this last high that created that shift of structure, and my TP should be below. So I'll be taking you guys to the chart. I'm going to be showing you guys how to catch these entries in a bearish structure. So looking at the chart, this is for the bearish example. Now what do we have? We had price created a break of structure. Now after we had that break of structure, we had a supply zone which was created around this very zone. So basically what I'm expecting price to do is to come in at that very supply zone for us to sell. So I'll go to the 5 minutes time frame. So now on the 5 minutes time frame, we had price largely back to that very supply zone. And looking at what price was doing, we had price creating series of higher highs, higher lows, higher highs, higher lows. This was the last higher lows that we had. So basically what I'm expecting price to do is to create a shift of structure at this very level, breaking this very higher low. So now after we had that very shift of structure, we had a little supply zone which was forming around this very particular level. So at this point, what I'm supposed to be doing is to be mapping out that very supply level that formed, expecting price to pull back at that very level for us to sell. So if I want to be interested to sell at this point, I want to be interested to sell at this very 5 minutes supply level. My SS should be above this very high, and my TP should be below. At least it should be 1 to 2 or even 1 to 3 weeks rewards. I should be able to target at least, even if it's 1 to 2, 1 to 3 weeks reward. So we'll be moving over to the next example. This is another sell example. Now, what do we have? We had price created a break of structure around this very point. Now, after we had that break of structure, we had a supply zone which was created at this very level. So basically, what I'm expecting price to do is to pull back at that very supply zone for us to sell. Now, as soon as price came in at that very supply zone, what I'm supposed to be doing is to go on the 5 minutes time frame to look for a shift of structure and a quick retest for us to sell. So at this point, I'm going to be going to the 5 minutes time frame. Now on the 5 minutes time frame, we had price came in on the higher time frame demand. So basically what I'm expecting price to do is to create a little shift of structure for us to sell. So at this point, this level is the last higher low that we have. So basically what I'm expecting price to do is to come take out this zone to sell. After I must have seen price created this shift of structure, I'm going to be interested to mark as the last 5 minute bullish candle that formed before the aggressive sell to the downside, expecting price to pull back at that very point in order to sell. So if I'm going to be interested to sell, I want to be interested to sell at this very level. My SA should be at this high and my TP should be below. I can decide to take 1 to 2 or even 1 to 3 risk reward. So that's basically how to leverage well with the higher time frame structure and the lower time frame structure to get a precision entry. And this will be the end of this video. If this adds value to your trading, make sure to like, subscribe, and also turn on the notification bell so you don't miss out on any of my trading insights. Alright, thank you and see you on my next video.